Hey there, welcome to Wealth Wiz, your one-stop shop for everything finance. Whether you're a seasoned pro or just dipping your toes into the financial world, this channel is here to hook you up with expert tips, handy advice, and all the latest money buzz. Go ahead and hit the subscribe button if you're ready to seize control of your financial future. Let's dive in. You're in for a treat because today, we're diving deep into the genius mind of the Oracle of Omaha himself, Warren Buffett. If you've ever wondered how he manages to consistently outperform the market and make investing look like a walk in the park, you're in the right place. This video will take you on a controversial journey through 9 investing tips straight from the Legends playbook to help you navigate the ever-changing landscape of investing in 2023. 1. The gravitational pull of interest rates. Alright, let's kick things off with the big one. Interest rates. Imagine interest rates as the invisible force that either propels or pulls down your investments, just like gravity works on an apple. In 2022, many investors got a rude awakening as they witnessed the power of interest rates. Low interest rates act like a gentle breeze, lifting asset prices, while high interest rates are akin to a gale force wind, dragging stock prices down. Who's in charge of these interest rates, you might wonder? It's the Federal Reserve, led by Jerome Powell in 2023. And guess what? Powell has been hitting the brakes on low interest rates, taking them from practically zero at the start of 2022 to a whopping 4.33% by the end of the year. What did this do to stock prices? Well, it's like turning on the gravity machine. They went down. And Powell plans to keep cranking up those rates in 2023. So, prepare for more turbulence. But don't worry, Buffett's got some tricks up his sleeve to help you navigate the rocky terrain. 2. Embrace falling stocks like a true value investor. Now, here's a mindset shift that will set you apart from the panic crowd. While most investors break out in a cold sweat when they see their stocks taking a nosedive, Warren Buffett does a little happy dance. Why, you ask? Because he's a true value investor, and he knows that when stock prices tumble, it's like a clearance sale on quality businesses. Picture this. Stocks are pieces of actual businesses, and you want to snag them at a bargain. So when the market crashes, it's like your favorite store offering a discount on those fancy sneakers you've been eyeing. Warren Buffett sums it up perfectly. Be greedy when others are fearful. That's his secret sauce. He's buying stocks since he was 11 years old, and when stocks drop, he considers it a treat. So, take a page out of this book and embrace the falling stocks. 3. Learn from Buffett's 2022 shopping list. Curious about what's on Warren Buffett's shopping list for 2022? It's like a sneak peek into the mind of the investing wizard. He made several purchases, but we'll focus on the big 3. His top buy, in terms of portfolio weight, was Chevron, an oil giant, making up 5.72% of his portfolio. It had a low price to earnings or PE ratio and a sweet dividend. Next up was Occidental Petroleum, another oil company comprising 3.3% of his portfolio. Again, low PE and a dividend. Now here's a curveball. Taiwan Semiconductors. Buffett usually stays away from tech because he admits he's not a tech whiz, but this company provides essential components for tech gadgets. And he knows people won't stop buying smartphones and computers even in a recession. So why not own a slice of the pie? This stock also boasts a low PE and a dash of dividend. See the pattern? Low PEs and dividends are music to Buffett's ears, and they could be your golden ticket in 2023. 4. Invest in high-quality businesses. In these uncertain times, it's more critical than ever to pick your stocks wisely. Good businesses weather the storm, while the bad ones sink like stones. Warren Buffett aptly puts it, only when the tide goes out do you discover who's been swimming naked. We don't need naked swimmers in the economy, so it's crucial to invest in high-quality businesses that produce products society genuinely needs. Think about brands like Coca-Cola, Apple, Kraft Heinz, and Duracell. They've been Buffett's go-to choices. These are the stalwarts that shine even in tough economic conditions. So in 2023, stick to businesses that are made of sterner stuff. It's your best bet for a smooth ride in the investing world. 5. Slow and steady wins the race. Cathie Wood might have forgotten this golden rule. Rule 1. Don't lose money. And Rule 2. Don't forget Rule 1. Kathy had a wild run in 2020 and 2021 with high growth tech stocks, but 2022 hit like a ton of bricks. When the economy stumbled, high flyers like her fell even harder. In the same period, Warren Buffett was up 56%, leaving Cathie Wood in the dust at negative 5.1%. The lesson here: don't chase risky, high-growth stocks at any cost. Be conservative and avoid overpaying for stocks. Slow and steady might not make headlines, but it's a winning strategy that stood the test of time. But hold on a second. Before we dive deeper into the financial galaxy, let's give you a big high five for tuning in and hitting that subscribe button. You, my friend, are officially part of our awesome financial crew. We're a bunch of money-loving enthusiasts ready to conquer the financial universe. So, thanks for joining the party. Let's get back to the video. 6. Beware of borrowed money. Imagine you're buying a horse. You'd want one that's strong and can run without limping, right? Well, the same applies to the businesses you're invested in. Too much debt is like a limping horse, and it may not show in good times, but when the going gets tough, you will regret it. Before you buy a stock, take a peek at its balance sheet. Look at the cash they have on hand compared to their debt. If it's manageable, like Alphabet, you're in the clear. If it's drowning in debt, like AT&T, that's a red flag. Avoid the limping horses in your portfolio. 7. Know the value of what you buy. There's a saying that a fool knows the price of everything but the value of nothing. In the investing world, that's a recipe for disaster. Warren Buffett's secret weapon is knowing the true value of a stock. It's like having a treasure map. You compare the price to the treasure's real worth. Calculating a stock's true value isn't as complicated as it sounds. You project its future cash flows and discount them back to the present. It's a bit like peeking into the future, and it's the core of Buffett's strategy. So, when you know a stock's true value, you can sleep soundly, even if the prices swing like a pendulum. 8. Invest differently from the herd. While most investors flock to the Wall Street and follow the crowd, Warren Buffett takes a different path. He's an Omaha guy, not a Wall Street guy. He buys and holds, doesn't trade like a maniac, and goes against the grain when others are panicking. This independent mindset sets him apart from the average investor, who, let's face it, doesn't have a great track record. So if you find yourself disagreeing with the masses, you're in good company. Think independently and invest differently to reap the rewards. 9. Stocks, your greatest asset. Now, for the big question of 2023, where should you park your money? Let's take a quick trip in history to understand. Real returns, adjusted for inflation, reveal the stocks have outperformed other asset classes. They have outperformed bonds by a mile and left gold in the dust. Holding on to cash is like a slow leak, with inflation nibbling away at your savings. While there are other options like real estate and crypto, which we won't dive into here, stocks or businesses have been the golden ticket over time. Of course, if you're older, you might want to diversify into less volatile assets. But if you're young or middle-aged, history says stocks are the way to go. In a nutshell, invest like Buffett, and you'll be on the right path to financial success in 2023 and beyond. So, get out there, grab those opportunities, and let your money work for you like a seasoned pro. Happy investing. Hey, we're thrilled to have you here today. If you had a blast with our content, and we bet you did, show us some love by giving that like button a little tap, and don't stop there. Hit the subscribe button, and you'll be a part of the cool club that never misses our mind-blowing videos. Oh, and speaking of cool, share this video with your pals and work buddies who could use a financial boost. Let's team up and build a rock-solid financial future together.